Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, July the 29th, the year 2019. Let's talk trading. Change. I had half a mind to put up that David Bowie song, Changes. Changes. Yeah, I know. Don't give up my day job for my singing career, right? Anyway, change. What's that got to do with trading? Everything. When you trade, you want the price to change. You want it to change in your direction so when you exit the trade, you can make a profit. But for some reason, that seems to be difficult for most traders. They just have a hard time, I guess, picking direction, and their timing is off. So something has to change. Now, what most traders will do is they will try a method fails to produce a profit, so they'll change the method. And they repeat this process over and over, sometimes for years, and then they just give up. But what they never really changed was themselves. They did everything external. They changed everything external. Oh, this platform sucks. This broker sucks. This indicator sucks. This trading guru sucks, so I'll listen to somebody else or watch somebody else's videos. Everything they do is external. But what about the internal? What about changing the way you approach, changing your thoughts, changing your beliefs? Changing what you do. Everybody wants that big profit. Well, those big profits take time to materialize. So maybe you move your break even too quickly. You move your stop loss to break even too quickly. You don't give the trade any room to breathe. You don't change the way you look at history, meaning you seem to focus on those big losses that you may have had, or even more so on those little wins you had, which had you not taken the win would have turned into bigger winners. You always focus on the things that you missed out on, as opposed to the things that you did that actually produced profit. So maybe, just maybe, if you take a look at what you've been doing that has produced profit and you just repeat those instances, maybe overall you'll become a profitable trader. But you see, that's going to take changing the internal, not the external, but the internal. And most people just don't like to do that. They want everything around them to change. But if you change, then guess what? Equilibrium makes everything else change. Maybe a little in some cases, maybe a lot in others. So as you're trading this week and from now on, I just want you to consider change. And by the way, I'm not really talking about pocket change either. But to make sure you don't lose your pocket change, risk and money management must be employed on each and every trade. Once again, each and every trade. Okay, the weekly, we still have some gaps that need to be filled. You can see the euro yen jumped out of that lower previous week's wick zone and is now continued into the upper, and we're 44 pips off of that low. As you can see, we had a big move here just the past hour, hit the buy zone, went through the pivot, and continued upward. So yesterday, I think we picked up the video somewhere in this area. We did yesterday's video. You see there was a short trigger, but our bias was long, so that trigger was ignored. And we did pop out of the previous high of yesterday. Here, you see, we went up by about 4 pips above that previous high. But there's some huge moves here We've got 1, 2, 3, 4, 5, 6, 7 pairs over 100. 3 of them are over 200. We haven't seen that kind of activity in a while, but you can see it's central on those pound pairs. Something must be going on with possibly Brexit. And since I opened the trading portfolio just a few minutes ago, you can see we've had a short trigger, and we'll see where that leads us, because we're kind of in rare air here. As you scrunch the chart down, you don't see anything this high. Definitely had a nice breakout. And just looking at the frequency distribution here on the H1 chart, you can see we've got a current range of 11, average range of 11, and you see it pulled back, and you see this bar here obviously was a let's see, that was how many pips? I guess I can stretch that. Looks like about 25, 26 pips. You can see how infrequent that happens. Price action, pro trade right here, short at the line. The novices or newbies, you have to wait to the next bar, and you'll be looking to go short depending on where this bar winds up when the red candle hits one of these lines. But as I've stated before, and as you can usually just see with the powers of observation, that when a H1 bar opens, it usually doesn't stay within the range. But here we had 2 hours in a row. Finally, we had the breakout, and then here we had a huge breakout, and these were just tiny breakouts. So with that 11 pip average range over the last 100 H1 bars, you can see if it starts anywhere inside here, 11 pips is bigger than 10, it's going to have to break out. Okay, using the TRO HL5 here to simulate the wick zones. You can see here's previous day's high. This was the previous day's open top of the candle. So between these two lines was the wick zone, and you see that breakout there. And here is the candle bottom, and the previous candle bottom, previous candle's low right here. And you see there was a breakout of that lower wick zone. And just looking at real simple here, weekly wick zone, weekly buy zone. Right here you see the daily, weekly open on the first day of the week is the same, but you see all that price action. And just remember, if you take the direction of the last cross, you know, this right here, that forms that wick. If it went this way, then this would be the wick. So there was a very nice move on that last cross to the upside. It's not that difficult, traders, but as I mentioned earlier, you have to change. You really do. And you really have to look at things from a longer term perspective when it comes to your profits. I want you to contemplate this. Let's say you have a $1,000 account. Can you grow that account by 1% in a month? That's 10 bucks. Now I want you to think about it. You're probably thinking 1% of 10 bucks, that's nothing. Well, but that's 1%. If you do that 12 months in a row, you just had a 12% return. If you can do a 12% return, you are going to be, like one of the top money managers in the world. I want you to think about that. When you look at all the money managers in the world, if you can return 1% a month, 10% per year, 12% per year, sorry, you will be in the top 10% of money managers. So you could do that in one trade. Maybe you do that in 10 trades. Maybe you do it in 50 trades. You just scratch it out. But if you could do that on a regular recurring basis, just produce a 1% per month profit, that would be $10 per 1,000, you're golden. So that's usually not what traders come to the market wanting to do. They want to come to the market like they see in those ads and those commercials and videos, how this guy turned, you know, $5,000 in an account and $3 million. I mean, that grabs your attention. Oh yeah, you want to do that. But reality check. How many people have taken a course from somebody who themselves did one of those huge gross of an account from 5,000 to millions? How many of them have grown their account from 5,000 to a million? I would guess the number is probably, you could use one hand to count the number of times, and you might not use any fingers or thumbs to count. So, point being, it's like, once again, you got to change your perspective. You got to change what you believe in. You have to change what you do. You do those, and then maybe you'll change and become profitable if you're not already profitable. Because, fellow traders, just remember, it's not what you trade, it's how you trade it. So, this week, last week of July 2019, I want you to go out there and drain the banks.